minus 4.4% average move. Of course, minus because it's moving down. Wave 3 gives you a 5.2% average moving up, and wave 4 gives you minus 9% average moving down. Okay. What about the next wave? Is there anything to be said about this? And there might not be. For instance, bull A is followed 45% of the time by a bull wave and 52% of the time by an inverted wave, and only 2.7% of the time by an inverted wave. Did I say inverted? I meant to say bull, bear, then inverted. Okay, that's one way of getting to know the market that you're trading, is by looking at the statistics. However, there's a big caveat that I need to bring up here, and that is statistics can be deceptive. They can be very deceiving, and you can get sucked into statistics. And you need to be careful of whether a statistic is statistically significant or not. And much of this very detailed information, such as what the next wave is probably too detailed for you to really use in your trading activities. So you need to be careful. The statistics are there for you to view and you to use. You can export them as a CSV file, print them out, analyze them, do all kinds of things, compare the different markets that you're trading. But you need to be careful of the fact that sometimes you can overwork the details. Now, there is another way of understanding the shapes of the cycles, the character of the financial markets that you're trading, and that is by trading them. You build a trading history, which is not an exact record of the trades that you would have performed. It is a process that is used in the sentient trading methodology to understand and reveal the character of the market during the time, of course, that you were trading it or building the trading history. And that is revealed through these statistics. And for instance, taking a wave 1 trade under positive underlying trend conditions resulted in a 50% win ratio and a $2,700 profit. Okay, whereas taking a wave 4 trade under negative underlying trend conditions, you would have in fact lost $50 and had a 50% win ratio. You can look at, again, many statistics here. You can look at which different bear types made money or lost money. You can look at the sentient wave 3x4 relationships. These are things we'll be speaking about next week. I'm speaking again about sentient trading methodology next week. Today is only an introduction. You can look at trading previous sentient waves. Okay, so you can get to understand your market that you're trading through studying your trade report in terms of the sentient wave trades. Okay, so those are two ways of understanding character. All right, and that brings to a conclusion this introduction. I wanted to keep it short. I plan to keep it down to 45 minutes, which I think I've managed to do exactly. That's an introduction to the sentient trading methodology. I know many of you who are working in sentient trader software already know this stuff, but I hope nevertheless you've found it interesting to remind yourself why it is that we're doing what we're doing. We are analyzing markets according to Hurst cyclic theory. We are trading markets according to Hurst's trading methodology, but we are adding adding a sort of a filter, if you like, to our trades by making sure that we only take trades that suit the character of the market that we are particularly trading. Next week's Traders Chat, I'm going to speak about some more details. We're going to look in detail about at those statistics that you can get from sentient trading from Sentient Trader about the character of the market, and we're going to talk more about the statistics that are revealed through trading it. And I'm going to point out pitfalls that you need to be aware of, and how best to use that information to enhance your trading. Right, let me close that. Great. So thank you very much. That in fact brings to conclusion the body of today's Trader Chat. I did want to try and keep it a little bit briefer and to the point. we have time for questions, so please let me know any questions that you have, either about sentient trading methodology or any other questions. And in fact, let me bring up a chart of the S&P 500, and I'll upload that PDF in a minute. And you can see here the wave shapes that are playing out now in the market. There's a bull A, there's a bull D, and so on. You can see all the wave shapes that are playing out with not many inverted patterns, of course, which is good. So those are the wave shapes that are playing out at the moment, and be happy to speak about them and so on. So thank you very much. Thank you very much for joining me. For those of you who are on tight schedules and need to leave, thank you very much for joining me. If you have any questions, please do send them to me in the chat window, either about this or about anything else. And I look forward very much to seeing you all next week. And bear in mind that in 2 weeks' time, the 19th of October, there will not be a Trader Chat because I will be on my way to Canada for the CSTA annual conference where I'll be presenting. So let's see. Well, let me first of all upload a file. And so the people who need to, there we go, need to go. Just give me a moment while I upload this file, and let's see. So you can have a look at this PDF file that I've used to help explain things. All right, of course I can't find it when I need it. It should be a PDF document. There we go. Sentient intro, PDF. All right, I'm uploading that file. Okay, thank you, Peter, and see you next week. Mark, can you talk about the nominal model, the cyclic eddy-current harmonic ratios of a representation on it? Yes, Mark, I can show it to you briefly now. I noticed that the the uploading of that file, it's a huge file. I'm sorry about that. I'll have to find another way of getting it to everybody. Perhaps we'll make it available as a download. Uploading it, it said it was going to take an hour and 20 minutes to upload, so I don't think we want to hang around for that. Mark, nominal model, yes, if you go to analysis, of course, nominal model, edit model, you can select from a list, or you can look at the current chart model. If I look at the current chart model, you'll see here's the nominal model, and there is the harmonic ratio between all the cycles. This is an unusual nominal model because it has a 6-year cycle in it, so it has a harmonic ratio of 3:2. That's a very unusual model, and also 4:3. But here are all the other harmonic ratios. You can see they're 2:1 and there's one 3:1 harmonic ratio. This is an entire Trader Chat session on its own. So what we'll do is we'll plan to speak about editing your nominal model and creating custom nominal models at a Trader Chat in the future. But certainly this is how you can see it, and this is how you can see the harmonic ratio. There's a very important thing to be aware of, which I'll be speaking about next week, when it comes to trading using the Sentient Trader trading methodology, and that is that the 3 cycles shorter than your trading cycle must have harmonic ratios of 2:1. In fact, you can cheat it by creating a custom nominal model, so it's not too much of a limitation. Using Hurst's trading methodology, there are no such limitations. It's only if you want to apply the additional filter of the sentient trading methodology that you must make sure that the 3 cycles shorter than your trading cycle all have harmonic ratios of 2:1, which means that generally on an end-of-day chart, you can trade any cycle shorter than the 54-month cycle. The 54-month cycle is the only one that you can't, because of course the 18-month cycle is a 3:1 nominal model. Any cycle shorter than the 54-month cycle you can trade using the sentient trading methodology. When you are trading an intraday chart, you need to be aware that between the 1-day cycle and the 5-hour cycle, there's a 5:1 harmonic ratio. and therefore you cannot trade the one-day cycle using the sentient trading methodology, unless you create a half-day cycle which sort of bridges the gap, which I will explain next week, and it's very easy to do, and so it's a way around that. If the harmonic ratio is larger than 2 to 1, it will not trade. Does the harmonic ratio longer than the one you're trading matter then? Yes, it does, Mark, but it won't prevent trades. But if the harmonic ratio of longer cycles is not 2 to 1, then the underlying trend isn't simply negative, neutral, or positive. You get sort of shades of negative, neutral, positive. I can show you by zooming out on this chart. Here, if we have a look here, if we have a look here at the 40-week cycle, the 40-week cycle has the cycle immediately above it. It's only one cycle above it that has a 2 to 1 ratio, and you'll see that here there's a bull A with in brackets the number 2 after it, and here there's a bear E with the number -2 under it. That is positive and then negative. Now, whereas the 18-month cycle has bull D with the number 1 inside it. The reason that's got the number 1 inside it is because the one cycle longer, the 54-month cycle, has a 3 to 1 harmonic ratio. So what happens is you get subtle degrees of underlying trend. You don't just get negative, which is -2, or neutral, which is 0, or positive, which is +2. You get subtle details. And when you're performing sentient trading, those subtle details aren't taken into consideration. It's either negative or positive or neutral. So it is recommended that you have the one cycle longer, or in fact the 2 cycles longer, with a 2 to 1 harmonic ratio, but it's not necessary. It will trade even so. So you can trade the 5-hour cycle, for instance, which has the cycle above it at 5 to 1 harmonic ratio, which is of course not 2 to 1. But all those sort of details I'll speak about next week when we go into more detail about sentient trading, the sentient trading methodology. Okay, if there are any more questions, I'm happy to answer them if I can. And thank you very much to everybody as you go off, and good luck in the markets. I think that it's going to be another interesting week. I hope that you're all taking a look at our ST outlooks. I'm really enjoying writing them, and I appreciate all the comments that I've been receiving by email and comments on the website. So please come and have a look at our ST outlooks, Sentient Trader outlooks for the week. And if there aren't any other questions, I will bring things to an end, and with that, say thank you very much for joining me, and I look forward to seeing you again next week. Jim, location of outlooks. Thank you, Paul. Jim, that is the location of our ST outlooks. Please take a look. I'm doing them 3 times a week, and I'm looking at markets, gold markets, S&P 500, and the euro US dollar. So take a look and see what I think about the market outlook, and take a look and let me know what you think. I see Bart saying everyone on Twitter is calling a bottom. Yes, I think that's the inevitable. What's it called? The wall of hope and the cliff of fear, or something like that. Everybody's saying, "Yay, the market's bottomed." I think it's very far from a bottom. Anyway, we will of course be